So we're going to talk a little bit about navigating segmentation into a smaller version of segmentation. And by doing so, we're going to take something that's available to us on the weekly, as we're looking at now, and translate that into more reasonable timeframes for us to trade. So I went through and I did a very, very loose markup of the weekly segmentation on the ES. And what I'm going to go do is take a look through and identify what can be used in a much smaller area that can help us on a daily and intraday perspective. But in order to get there, first I'm just going to go through and each of the segment breaks, I'm going to mark off with a price level. And I'll remove these so you can see what I'm talking about. I've got a price level there, and I'm going to adjust these so that they are a bit more eye-catching as boundaries to our segments here. And the reason I'm doing this is because when I navigate timeframes, and you'll see this as we get closer to the daily, is I want something that truly identifies a segment break versus what I'm looking at on a typical intraday perspective. So I've got my standard set of intraday tools that are identified in a very particular manner. They're very, they're not as abrasive on the background as I will typically use segments for. And really what you'll notice as we progress through this is segments and market segmentation can be very easily translated into support and resistance. So what you're looking at is really just very, very exclusive support and resistance sets. And it helps you to identify what you're looking at in a more, not necessarily extreme, but a much bigger picture narrative. So if we look at this now, we've got a segment above that is important to us, a segment that we're in that is important to us, and a segment below that at the current time is not necessarily as important. Actually, I want to text. And the reason being is that this is so far away from where we currently are, but this could be breached, and this is more reasonably going to be tested in the near future. So we'll just go through and identify current, and we'll identify important. And now what we can do, especially on a broader, like just so we're not really overwhelming our chart, is remove all of the other noise and keeping what's immediately above and immediately below. And so now if I transition into a daily, I can once again go through segmentation in areas that matter to me and how we're looking at this as a whole. So I'll do this once more with market segmentation on the daily chart. Zoom in a little bit more. And you'll notice that this time around and the last time around, because we're really looking at segments that only expand back, in this case, where we pushed into all-time highs. So in here, nothing to the left of this is overly important because there's nothing there. So I don't need to zoom out super far, and I don't need to extend my segments way beyond what they're currently at. And for this, it's actually okay if your segments don't end at the same point, because there's going to be fluctuations in different areas, and this will help pretty drastically with support and resistance as you're going through this in the future. So don't be afraid to overlap where your segments may or may not kind of collide, right? They don't necessarily always need to end at the exact same point, right? They don't need to end right here. It's important to note where your weekly segments end. It's important to note where your daily segments end, but they don't need to coincide. And segments are super subjective, right? You're looking at market movements and what makes sense to you. It doesn't have to be exclusive. And it's not, there's not one right way to do it. All you're looking for is market movements that make sense to you, and identifying segment breaks where you can see differentiation in market sentiment. Uh, and you're doing this because it's really just a visualization tool. Market segmentation you won't find really identified anywhere outside of here, to be honest. It's really something that I started to implement as a tool to get away from the monotony of looking at just pure price levels, and also to visualize larger scale movements in those times when I'm more so trading zone to zone, or I'm trying to take position trades. Uh, it's important to change things up in that regard, so that you're not always looking at the same subset of information. For my daily, I'm going to change to a light blue. Let's see if this is the default. And if they are matched on the top, then we don't necessarily need to identify that, right? So this is already our upper segment. Uh, because what you can really do is identify these as, like, you know what carries more weight. You know that a weekly segment carries a bit more of a boundary than a daily segment, but each of those, especially weekly and daily, are both very important and very heavy in terms of the transactions that are taking place there. That you don't necessarily need to uh, put precedence or weight or more importance on one over the other. They're both important in their own right, and so you don't need to wait for segment tests or segment breaks on one particular kinds of market segmentation. And I'm going to do something very similar with this, where I'm going to look at what's important to me right now and what's important to me in the near future, where I don't really feel the need to look um, 1,100 points down. It's not reasonable, it's not feasible in the next week or so. And so I don't necessarily really care about those. It's going to take a while to get back down there, and it's not going to impact my immediate trading. So I'm not going to mark those up right now. There is the option always to keep an active library of segments, but for my purposes here, I'm just going to focus on what's current, what's up above, and what's down below. And so I would say that the extremes of where I would like to look, um, really, for the current time being, sit within here, right? Because this is current, this is immediately below, this is still kind of current, and this is immediately above. Um, and I want to do that because we're still on the daily. This is a big point spread. This is still a 400 point spread. That's huge. And especially when you start to get down into working with 5 point stop losses and working on intraday trades where you're trying to target 15, 20 points at max. All of this stuff up above and below, sure, it's great to have on your chart for just overall sentiment, but for the intraday stuff, it's not necessarily as important. So with this, if we drop and we start looking at the 4 hour, well, then our intraday stuff starts to make a bit more sense, and it starts to really take shape. And we can once again go through and do segmentation if we so desire. I'm going to stop going as granular with segmentation and looking as left. I really want to focus on some segments that impact a lot of what's happening here. And what I try and do is I try and as I get down into the 4 hour and the hourly, I try not to segment any really below a 4 hour, because then your chart just starts to get too crowded. But as you get down into the 4 hour, the hourly, I really start to diminish the weight of what I'm putting on the chart, and I'll show you when I start to break out these segments. Uh, I really try and focus on making it readable, especially as we've already got some pretty abrasive colors and weight on the chart against the black background. So I'm going to choose where I would like to stop my segmentation here, and I'm going to consider this gap its own little segment, and then I will stop right on this one here, because again, we're drifting into 4 hour territory. This is starting to become um, a bit new minute and a bit too granular to really make a massive difference. So what I meant when I was getting at I try and reduce the weight is I'll now try and go into something that sits a bit more softly against the background, so that I know that if we've got something like this, right, where we were coming up to this level and we've got a pairing, and this isn't a good example because this high set the level here, but if we're coming out of this level, or if we've got something else that really stacks a 4 hour more diminished level against a weekly or a daily that's a very important level, I know that that's going to carry extra weight in my mind in terms of entering a trade around that area, and carry slightly more confidence. Um, and so I like it so that it doesn't necessarily scream at me when I'm looking at it. I like having the option of having some things be a bit more subtle. And again, this is all personal preference. You don't have to identify things in any one particular manner. Do what makes sense to you, do what's reasonable and readable to you. But to me, when I look at this, this is now clean. All of my abrasive colors, my red, my blue, they're spread out. My more subtle colors are, and my more subtle things, I know this is my 4 hour. And so, to kind of harp on what I was talking about earlier, we're obviously not going to get this move, but let's say that we do something like this, where I've got in close proximity a 4 hour level and a daily segment break, or a weekly segment break. I would be very apt to look at this and say, okay, this is a very strong level. I want to establish a position around here, just because I can almost, I don't want to say expect, because you can't really expect anything, but I can anticipate a very strong move coming out of these levels. Might not be exclusively at the 4 hour, might not be exclusively at the daily. We may have a lot of momentum carrying us into that, so we may drift past it slightly, much like we did here. But, and when I say here, I'll zoom in a little bit, much like we did here, you'll notice that when you're working with segments exclusively, and this is where it really benefits you to not dive too deeply into 15-minute, 30-minute, 5 minute with this type of market identification and markup, is they're not exact. They're very loosely defined guidelines and very loosely defined spots on your chart that will often act as really solid slingshots or trampolines for things to happen, right? this is a great example of we break through this level, and we've been trying to do so for a couple of times. This is iffy. This is iffy. We really break through again with some strength here. And then when we come back up and retest, for all of you who are new, this is not necessarily easily readable when you're looking at candles, but what happened here is that the market very quickly shot up to this level and then dove out of it. And we can elaborate on that. We can show this on a different timing on our chart down to the hourly. You can see that we came down, shot up to this level, and then immediately tanked out of this level, right? This is a 45.11 down to 44.86, so that's a 70-point run, almost in under an hour. And when you start to pair this with other factors, other things like fibs, like trend, support, resistance, etc., you really start to formulate a solid opinion. But my point being that even with this, right, we drift past this very strong level, 45.12 up to 45.17, 5 points almost on the dot. So that would have hit a stop loss. And so what you want to do, especially when you're looking at it on the higher time frames, is you just use it as a general guide and not necessarily as an exclusive level that you intend to enter on. Here it would have worked out a little bit better, right? We dive past this level, hit our lows in our segment, really pop out of that segment, and then come back to our 4-hour segment. And from that 4-hour segment, we dive down very strongly. And so you can see that just using market segments and boiling down from a daily, weekly, general overview into something like a 4-hour markup. And if we really wanted to boil this down even further, we could go to an hourly. I tend not to. You can really trade it basically off of this. This will give you almost everything that you need. I wouldn't recommend it just because there's so much more that you can leverage on your charts, but this gives you a really solid baseline and blueprint to start formulating opinions, educated decisions, and working with other tools and pieces of confluence to give you that really strong sense of entry and strong sense of confidence in your trade. So what I would recommend is start on the daily or the weekly and start to play around with the chart and configuring the chart to look like you want it, and figure out what makes sense to you in order to keep a clean chart and a readable chart, but also give you very direct identification of what you're looking at. I look at this, I know weekly, daily, 4-hour, right off the bat. And so something that's going to be recognizable to you, but not going to make your chart seem cluttered. And there's no real importance in what you're identifying. Really just start to play around with segments, going from the weekly and then building out daily segments within the weekly segments or around the weekly segments, and then do the same with the 4-hour against the daily, and identify what's current, what's around it, and start to map out some things that look clean and make sense to you.